All right, so the Canadian dollar just wrapped up its fourth straight week of losses against the US dollar. Today, I want to dig into why our dollar is struggling so much, what the Bank of Canada's latest moves mean, and because it's just a week away, I'm also going to look at how the US presidential election could make things worse. So let's get into some key numbers here. On Friday last week, the Canadian dollar dropped to its lowest point in nearly 12 weeks, sitting now at around $1.39 to the US dollar, or about 72.05 US cents. So what's behind this losing streak that we're seeing here? Well, one of the biggest drivers, probably the biggest driver, is the Bank of Canada's decision last week to cut interest rates by 50 basis points. That took the benchmark rate down to 3.75%. And it wasn't a small cut. It was the first cut of that size in 15 years if we go outside of the pandemic era. So certainly it caught a lot of attention. What is behind that rate cut? The decision to lower interest rate shows to me an obvious shift in policy. And essentially what the bank's doing now is they're trying to add a bit of fuel to the economy as things have been slowing down. The kicker here, though, at the same time the federal government announced that it is lowering the immigration targets, Governor Tiff Macklem, now at the Bank of Canada, of course, the chair there, says that these targets might impact growth predictions more than inflation. Now, less immigration, that could mean a smaller workforce. It could possibly slow economic growth as well, which would then, of course, play into future decisions by the Bank of Canada. Another thing we can't forget here is that U.S. election that is coming up, the presidential election. There are some major policies this time around in the U.S., and our economy here could see some ripple effects depending on the outcome there. Probably the most obvious example is Donald Trump. He's proposed heavy tariffs on imported goods, including Canada. And since 75% or so of our exports go to the U.S., this could turn out being a pretty big deal. Now, on the topic, Benjamin Wright says he is the Canadian rates and macro strategist at BMO Capital Markets. And he says, part of what's gone on is you have a U.S. election coming up, and there are risks to Canada and the Canadian dollar as part of the U.S. election. Until those risks are cleared, there is a meaningful headwind for Canada. We also saw some other domestic data last week. We saw a rise in retail sales by 0.4% in August. They're expecting that number to be matched in September as well. The gains, which is good, were below expectations, so that's not going to give our dollar much of a boost there. At the same time, we have government bond yields. They're sort of creeping up alongside the U.S. Treasuries. The 10-year bond is now near 3.27%. So what do we expect to come down the pipe next? Well, everything I've just talked about at play comes into a waiting game. If the Bank of Canada continues to lean into these rate cuts to stimulate the growth, we're probably going to see the dollar weaken further against the U.S. dollar. As always, it's pretty tough to predict exactly what's going to happen, but you do want to keep an eye here on the Bank of Canada's next moves and, of course, those U.S. election results. If things settle south of the border, the Canadian economy shows some resilience, the loonie could regain some ground. But for now, we're just going to have to watch those economic indicators, the political factors, see how those all play out. What do you think? Share your thoughts here. This week's poll question in our Pulse newsletter is, should the Bank of Canada continue to cut rates if inflation stays below 2%? I will put a link here so that you can share in with your thoughts. As I kind of mentioned in that last story there, Canada is dialing back on our immigration targets, reducing planned admissions from 485,000 in 2023 to 395,000 in 2025, down to 365,000 by 2027. And the goal here is probably somewhat obvious. It's to take some pressure off of the housing market and to bring our rapidly growing population back under control. The big question here remains, though, is could these cuts end up stalling economic growth? Now, in 2023, we saw our population grow by 1.3 million. 98% of that was due to immigration. And according to a number of people now, they're saying that this growth has been a lifeline for the economy. As an example, Charles St. Arnaud, he's the chief economist at Alberta Central, and he highlighted that immigration-driven spending and job market support essentially kept the economy afloat. He said, if it was not for the population growth that we had last year, the Canadian economy would have been in a recession at the end of 2023. Now, Scotiabank economist Rebecca Young, she shares similar concerns. She warns that we could see lower GDP if we have lower immigration. She says maybe we're talking about shrinking GDP by, 0.5% or 0.75%, but you're still talking about a shrinking GDP as opposed to growing GDP. She says that the policy shift we've seen here has gone from too hot to too cold, and she says that this does raise fears of a significant slowdown. Now, if we look at it from a business's perspective, there are fewer immigrants. That means fewer workers. And the Canadian Federation of Independent Business, CFIB, they've weighed in here, and they're reminding us that immigrants fill some critical roles out there, sectors specifically like retail, food services, where Canadian workers are often hard to find. And CFIB President Dan Kelly, he's warning that labor shortages may worsen, and that will restrict growth in these industries, possibly getting to the point where it impacts daily services. There is an upside, I would like to point out here. If we do see the slowdown in immigration, then we're looking at housing costs, especially rents. Those should stabilize a little bit when we have fewer people competing for the units that are available out there. No doubt, though, at least my suspicion is that even with benefits like this, there's still a real possibility of slower economic growth. If we see more signs of that, what is the Bank of Canada going to do? Well, they're probably going to need to adapt by more aggressively lowering the interest rates if that growth begins to lag. Imagine you're planning for your future and you're balancing the need for growth with the desire for steady cash flow. You might be thinking about retiring early, or you might be thinking about funding your child's education. Well, the BMO Balanced ETF could be the solution that you have been looking for. It's a carefully crafted mix of global equity and fixed income ETFs from BMO Global Asset Management, and it's designed to help you grow your wealth at the same time managing risk. The fund automatically rebalances every quarter. That helps you keep your investment strategy on track even when the markets are shifting. So you're not just investing in a portfolio, you're investing in peace of mind, and you know that your money is managed by a name that you can trust. Explore how the BMO Balanced ETF can fit into your life, how it can help you reach your goals. Visit bmoetfs.com today to learn more. We know that a lot of tenants face pretty poor living conditions. You think of things like cold apartments, you think of eviction threats from landlords, and now they are encountering a new challenge: lawsuits. In Toronto, residents living in the Mellow Court apartments, they protested outside of their landlord's business over issues like broken heating. Then they were later sued for defamation. And in this case, their landlord, Anne DeMello, she is seeking $200,000 in damages and claiming that the protests hurt her business. Now, the group is fighting back. One of its tenants, sort of a spokesperson, Mohammed Nizam, he says that they will not be silenced. Lawyer Danica So, she's representing the tenants at Mellow Courts, and she says this is a tactic that she hasn't seen before. She's saying, I have never seen that before. It's definitely an escalation in the tools that landlords have at their disposal to try and stop tenants from engaging in their expressive rights. In Vancouver, there is a real estate owner who filed a lawsuit after a number of tenants posted flyers portraying him negatively. They called him a landlord scum. They called him a slumlord. And he said his company had no desire to strain a relationship with tenants, and yet he also filed eviction attempts. Tenant rights advocates, they point to Canada's housing crisis as the problem that has made things so bad here. You think of the high rents, the limited affordable housing. They're pushing tenants to protest rather than move, and especially when you have rent controlled areas where new leases usually will mean higher rates. Now, landlords, for their turn, they are feeling more pressure to replace their long-term tenants with new renters who pay market rates. One more thing here. Landlords aren't only suing for libel, but they're also pursuing other legal measures, apparently, peace bonds, even criminal charges against tenants. Now, Cole Weber, he's from Parkdale Community Legal Services. He says that the cycle is likely to continue as long as housing remains so scarce. Now, he says tenants are under immense pressure from landlords in the rental housing market, and so we're seeing increasing numbers of tenants coming together and organizing to oppose their landlords' attempts to kick them out of their homes. When tenants organize, they can become a social force that landlords cannot contain. That is a wrap for today, and as always, I very much do appreciate your support of this channel. Thank you for watching this video, and we'll see you next time around.